Hello and welcome to my channel. Today, we're bringing you the latest on U.S. stock markets. The major indexes are soaring to new record highs, marking another milestone in what has been a remarkable year for equities. Investors are reacting to a combination of factors including strong corporate earnings, easing inflation pressures, and growing expectations of future interest rate cuts from the Federal Reserve. These developments have fueled optimism across Wall Street, and traders are eagerly watching how different sectors perform in this favorable environment. The S&P 500, Nasdaq Composite, and Dow Jones Industrial Average have all reached all-time highs in recent trading sessions. The S&P 500 has now surpassed its previous record close, highlighting broad strength across sectors including technology, healthcare, consumer goods, and industrials. The Nasdaq Composite, heavily weighted with technology and AI-related companies, has led the gains in recent weeks, reflecting investor enthusiasm for innovation and emerging technologies. Meanwhile, the Dow Jones Industrial Average, representing 30 of the largest publicly traded companies, has climbed steadily, driven by strong earnings reports and investor confidence in the resilience of blue-chip stocks. Several factors are driving this historic rally. First, inflation moderation has played a critical role. Recent data shows that consumer prices have risen less than analysts had expected. This moderation in inflation reduces the immediate pressure on the Federal Reserve to raise interest rates aggressively, creating a favorable environment for equities. Investors are interpreting this as a signal that the economy can grow without triggering runaway inflation, which adds confidence to stock market rallies. Second, corporate earnings have been surprisingly strong. Many companies across the S&P 500 have exceeded Wall Street expectations for revenue and profit, indicating that businesses are navigating economic challenges successfully. These earnings beats have contributed to a sense of optimism that the market's upward momentum is sustainable. Companies in sectors such as technology, industrials, and consumer discretionary have particularly impressed investors, showing resilience and adaptability in an evolving economic landscape. Third, rate cut expectations are providing further support. With inflation showing signs of easing and some data indicating that the labor market is stabilizing, investors are increasingly anticipating that the Federal Reserve may lower interest rates in the near future. Lower rates reduce borrowing costs, encourage investment, and generally support higher stock valuations. This expectation of a friendlier monetary policy environment has been a major driver behind the record-setting performance of the stock market. On October 24, 2025, the S&P 500 closed at approximately 6,791.69, the Dow at 47,207.12, and the Nasdaq at 23,204.87. These record highs were accompanied by strong breadth in the market. On the YNSE, 540 stocks hit new highs compared to only 53 new lows, while on the Nasdaq, 3,193 stocks rose and 1,450 declined. This broad participation shows that the market's gains are not limited to a few high-profile companies, but reflect strength across multiple sectors and industries. Despite this positive momentum, investors should remain cautious. The rally has been heavily driven by technology and AI-related stocks, which can be highly volatile. A shift in investor sentiment or disappointing earnings from major tech companies could lead to rapid market corrections. Additionally, some economic data remains delayed or weaker than expected due to factors such as government reporting lags, leaving some uncertainty about the underlying health of the economy. Elevated valuations in certain sectors also mean that even minor negative news could trigger sharp pullbacks in stock prices. Looking ahead, market watchers are keeping an eye on several key developments. Upcoming earnings reports will be critical in confirming whether the strong performance of recent months can continue. Federal Reserve policy decisions and guidance will also be closely monitored, as any signals of tighter monetary policy could affect investor sentiment. The technology and AI sectors will remain a focal point, given their outsized influence on market indices and investor confidence. In summary, U.S. stock markets are reaching new heights thanks to moderating inflation, solid corporate earnings, and expectations of rate cuts. While optimism is high, investors should remain vigilant and informed, balancing the excitement of record-breaking gains with awareness of potential risks. The current rally underscores the dynamic nature of financial markets, where strong fundamentals, investor sentiment, and policy expectations all intersect to shape outcomes. As the market continues to evolve, it is important to stay informed, watch for key developments, and adjust your strategies accordingly. This period of record highs reflects a market that is resilient yet complex, highlighting both opportunities and challenges for investors. By keeping an eye on earnings, monetary policy, and sector-specific trends, investors can navigate the current environment more effectively while remaining prepared for any shifts in market conditions.